let's just wind back briefly. We've had 10 years of financial support from central banks, and we've talked about it coming to an end. It really is coming to an end, and the support it's given to risk assets and actually caused people to move progressively up the risk scale as governments have bought, or central banks have bought bonds and reduced the value on lower risk assets. People have gone into higher risk type in portfolios. The pinnacle naturally being equities. By most people's book, equities are at above the historic valuation. Whether they're ultra expensive, again, these are ones to judge. They're not at extreme levels of valuation, but they're certainly above the average, which means the likely path of return is going to be lower than what it was historically if you look at where you're likely to go over a 2-3 year period. And there is this reasonable possibility that there will be a misstep in terms of the way financial conditions unfold over the next few years, be it US rates or something in China or something that evolves. That means that when markets are more expensive, of course, you would expect that the percentage loss will be higher. So the question is what to do about them. You don't want to sell your risk assets because they're giving you terrific returns, or what we'd encourage people to do is not let them just run up as a proportion of the portfolio because they're performing. So trimming positions is a good way of having some discipline around them. And then there are having some risk mitigation type of positions in the portfolio. That could be a market neutral fund. It could be a good way to a long short fund with a short position will cover some of that potential risk. It could be in global macro strategies, which performance usually is good when there's a dispersion of performance across many asset classes, be they currency, interest rates, commodities, even equity markets. So think carefully about some kind of insurance in the portfolio. Assume it's not going to give you a great return right now, but what you're looking for is to give you a really decent positive return worthy to be a sell-off in your risk asset component, so as to reduce the downside overall impact in your total portfolio and allow you to stay with long-term growth assets.